Finance Story, we have this enormous opportunity of interviewing Mr. Jaideep Mehta. He's one of our early stage investors. He has decades of experience in investment activities, in creating companies and launching them successfully. So, without further ado, I, Vyoma Rao, would like to invite our guest, Mr. Jaideep Mehta. How are you doing today, sir?
I'm very well, Vyoma. Good afternoon to you. Thanks for having me.
Wonderful. The pleasure is all ours. I just wanted to ask you about your background. How did you get into the field of, being an early stage investor?
Okay. Well, I'll tell you to begin with, I didn't really get into the field of finance ever as such. After I finished studies, after my business school, I actually didn't know what to do with my life, and ended up first continuing in the north of England in a small town called Adlington, doing a very interesting project for a sort of what I'd call the Larsen and Toubro of the UK at that point in time. Then I got picked up by GE, went off to the US for a short period of time. It was in the mid 90s that what we know as the internet today was actually created. And then, of course, Bill Gates realized that the world's about to change and flipped Microsoft on a dime. And so I got sucked into the world of technology. And there I have stayed ever since. And I also, frankly, look at investing more through a tech lens than a finance lens. The second part of your question, how did I get into early stage investing? Actually, it wasn't by design so much. My first investment was to, someone in the family came to me with the second business idea. They tried a startup earlier, which hadn't worked out. They came up with a second business idea, and I hadn't invested in the first one because you know, I didn't think it was the right place for me to put my money. But the moment he narrated the second idea to me, I thought it was fantastic, and I immediately cut a check. And the easiest way to describe that startup was what you know today as the test prep companies. He was doing match prep, but as it happened, we got a nice exit 4 years later, and Amazon actually bought the company in the US. And then I decided to just recycle that money into further startup investing. And here we are today, 8 years later.
Thank you for sharing that, how you got in as an investor. You have been a part of a lot of investment groups at a leadership position. Now you are associated with Indian Angel Network. What is the role that it plays in the startup ecosystem?
Every industry in any country needs an initial catalyst. I've been an angel investor in IAN since 2013-14. But what was happening was that, as great founders started to build great companies and they needed more capital, what today you would call a pre-series A or a series A round. 7-8 years ago, there was a real shortage of this capital. So they said, let's do something about that as well. And Fund 1 was raised. The fundamental thesis was we have a fantastic set of entrepreneurs who are budding on our own platform on the angel side of the house. When they need more capital, why don't we be the people who support them through the journey? And it's part of a larger vision of IAN, where the idea is that by 2030, we support 500 entrepreneurs with 5,000 crores, excuse me, of funding and create 50,000 jobs in the country. So where are we today? 2022, we are at 189 as we speak. Okay. And so that's how the fund business got created. Fund 1's been enormously successful, continues to kind of help a few great entrepreneurs grow their companies in a variety of sectors. On the space side of the house, very recently, the rocket which went up had a satellite attached to it from Dhruva Space. That's an IAN fund portfolio company. The scooters you may see if you live in and around Delhi and in other parts of the country as well, bearing the brand Zip, ZYPP. They do last mile delivery on electric scooters. They are a IAN Fund 1 company. So IAN Fund 1 is a living example that you can actually build a great portfolio of high performance companies while doing good. So this traditional thought process that there is a sort of a trade-off between companies which can be good for the environment or good for society and returns, actually, we don't find that to be the case at all. And now we're in the process of advancing our business to the next stage, which is where I've decided to join the platform full time myself. Yeah. I continue to be a active angel investor. It's been a fantastic ride.
What is your piece of advice, one, for an investor who wants to join IAN? And also in
Mhm.
terms of a startup, if I want to pitch my company to IAN, what are the parameters that I need to take care of before I, even step into the room?
People who want to invest in startups, I always say to them that have a passion for startups. Startup investing is a unique asset class. It's not like buying 1,000 shares of Hindustan Lever and then just putting them inside your cupboard. You should be in a position where you genuinely want to help the entrepreneur. You should be in a position where you are okay to tie up liquidity for 6 years, 5 years, 7 years, not expect to see dividends, nothing like that. Yeah. And equally, you should have the humility to understand that if you really want to build a successful track record as a startup investor, then you need to do at least 10 to 15 investments. Thinking that you'll do two and both will be successful, or that you'll do five and four will be successful, and that somehow magically you will beat the market. I think too many people have found out that a little bit of humility is actually called for, and it's very, very hard. It's very, very high risk investing. Okay. So those are my general, comments to my friends and family members who say we also want to kind of do startup investing. And a common refrain is, Jaideep, whenever you're investing next, tell us and we'll also invest with you. And I actively discourage that. I say, guys, you should invest what you understand and not what I understand, right? If you want to do that, then come and invest in my fund, where automatically there's a portfolio effect, there's a risk management process we have in place, and so on. And I can safeguard your money while giving you very good returns, right? So, I mean, I can go on. Startup investing it's very high risk, it's very illiquid, and do it only if you're passionate about the area. Don't see it as buying a flat or buying a piece of land or buying shares, right? So that's one thing. Where IAN comes into the picture, see, we are a referral based network. Okay. So the IAN Angel Network is for the members, by the members, of the members. We don't allow just anyone to come in. There is a very strong referral process. And actually, there has to be a unanimity amongst the existing member base before somebody else is allowed in. Okay. If anyone objects and there is a valid objection, then that individual cannot join. Now, you can say it's a little bit clubby or not, I don't know. But what it has done is it has maintained a very high quality of people, both entrepreneurial backgrounds as well as senior professionals, senior executives in companies. So the quality of people is just fantastic. And that works very well for us when founders come to us for investing, because founders are very conscious who their shareholders are. And they know that with IAN, they're getting a certain minimum quality. And IAN's reputation has been sterling over the last, almost 2 decades. So that's kind of what IAN is about. Today, we have more than 500 members. As I mentioned earlier, we've done just a few short of 200 investments. So it's been a very, very varied set of success stories, very interesting journey. And anyone can join, but with the above parameters in mind, and the ability to take risk, the willingness to take risk, both are important, ability and willingness.
Thank you. Thank you so much.
Okay. Yeah.
Also, coming back to the second leg of my question, that if someone wants to be an
Raise money. Yeah. Yeah.
entrepreneur,
Yeah.
yeah, or raising
Yeah.
money with IAN.
See, IAN has a very clear and simple philosophy. Okay. We by and large look for organizations who have what we call a real business model. So we look for companies which have a top line and a bottom line. Okay. So IAN, and especially at an angel level, I don't remember in the last 8, 9 years us ever investing in what I would call a market share model, right? That we'll build market share and 10 years later we'll think about profitability. It's our own money, right? It's our own hard earned money. We can't risk that. So the first thing I would tell any entrepreneur who's coming to IAN, make sure you have a business model that has a path to profitability. We're very comfortable investing in loss-making companies. I would say close to 100% of the companies we invest in are loss-making companies. But we like to see that 3 years, 4 years, 5 years down the line, The company first starts to generate cash, goes EBITDA positive, and then obviously starts to make profit at a net profit level. That's the first thing. The second thing that we look for is founders with execution capabilities. What I'm saying is that there is a world of opportunity beyond the prestigious engineering colleges or business schools. And IIN has supported entrepreneurs repeatedly who are from all kinds of backgrounds. And that is not very common. Prestigious engineering college or whatever. We don't care that much. So don't be shy about coming to IIN. That's the second thing. The third thing is we like to invest in companies which are making a better world, a better society. So IIN repeatedly invests in health tech companies, for example. IIN has invested a fair amount in companies which help SMEs become better. So, SaaS companies and payment platforms and so on and so forth. We are very big on clean tech companies with good business models. Okay. Very recently, we invested in a company from the Angel Network, company called Boson Whitewater. Boson puts in equipment and manages wastewater treatment for these big condo complexes where they convert sewage to drinking water. I mean, that's just amazing stuff, right? So we prefer companies who are making the world a better place. Okay. We like companies which are helping create jobs. We have companies which have a market potential, which is global. So if you think of, Unifor, you think of Farai, which is a platform that I led the investment on. These are companies with global market footprints. On the converse, another company which I was personally involved in, we have a lot of founders coming to us from so-called tier 2, tier 3 cities. So we're very happy to look at those as well. Okay. So those are some of the parameters. So
Okay.
if you're a founder listening to this or seeing this interview, guys, if you fit this bill, come to our website, put in your application. I can tell you this, we have a VP level leader with a multi geography. Did I just say that all wrong? With a multi geographic sort of team, whose only job is to look at all the inbound deals that we get and kind of pick and choose what come into our Saturday investor days. Yeah.
You mentioned that your career started when World Wide Web was getting its first stage. Then we had Web 2 and now Web 3.0. You have been a part of this journey for a very long time. So what was your visibility on all these three phases?
Yeah, see, the principles of investing don't change, right? What you need to recognize whenever there is a paradigm shift, like the one we're going through at the moment, where it is a question of time before the world recognizes both the importance as well as the power of Web3 technologies and how it can create a whole new internet. In these times, it's important as an investor to be able to separate the wheat from the chaff, identify the folks who are building companies based on old fashioned principles, right? And back those entrepreneurs who can execute. So while technology may change, new types of business models become possible with new technology, but the fundamentals of business don't change. So business models still remain top line and bottom line. The ability to execute still remains the ability to execute. The ability for someone to build a large organization and scale remains exactly the same. Ethics and integrity don't change. So there are, frankly, as we've gone through, the first wave, the so-called .com wave, then the Web 2, and now Web 3. What has changed is technology. What hasn't changed, and what I dare say will not change, at least during our lifetimes, is the basics of investing, right? And the basics of investing, I mean, uh, at the risk of sounding repetitive, the basics of investing haven't changed in 10 centuries, right? It's about businesses which ultimately create enough economic value to deliver value to their customers, to deliver value of a different sort to wider society, to deliver a good life for their employees, and to deliver returns and create wealth for their shareholders. right? And there are many more stakeholders, but these, society, customers, employees, and owners slash shareholders are, four of the main stakeholder groups. This has been the same forever. So I don't perceive any shift. I've certainly not made any shift in my investing philosophy. And I can tell you, I don't have, for better or for worse, I don't have a single Web3 portfolio company in my portfolio. Sorry, a Web3 tech company in my portfolio. However, I'm looking at two or three very interesting plays, which I believe can build businesses along sound lines. And I'm able to now talk to them at sensible valuation numbers, which was missing by and large last year. I mercifully didn't fall victim to the crypto rush. I counseled a lot of friends' kids actually, more than friends, to not burn their fingers and dabble. It was pure speculative frenzy. But does blockchain technology and associated cryptocurrency technology have a big future in the context of human civilization? I would say absolutely. And millions and billions will be made. The question is, do you have the ability to back the right founder?
Okay, that's quite an interesting answer to my question. What are the risks involved as an early stage investor? I mean, can you share one of the experience where you thought it would be a good investment, but then it turned out to be no, it's not that good?
Sure. So, oh yeah, yeah. There. I mean, I've had my share of flameouts, like anybody else would have had. Um, so let me unpack that question, right? So, what are the risks that you take? So there are, and I mean, just to as out as a mark of respect to founders, I won't take names if that's okay. But there was someone who would come to me, someone who had worked with me previously, who was building a company at that point in time, which was in the business of providing marketing services and lead generation to the salon and spa industry. Okay. This is from several years ago. Very solid business model. What could possibly go wrong? You're going to a business and you're saying, we'll take inventory off you and we guarantee we'll get it filled and pay us a fee for it. Right. And they had very, very good technologists at the helm. But what went wrong was that the business didn't scale. What went wrong was that the inventory of time that these folks were being given was all the time when no one actually wanted to go to a salon or a spa. And then there were some ethical issues, especially in the spa industry, which, we had underestimated the degree of challenge that we'll face on the ethical side. And ultimately, the business wound up and we had to write off our investments. That was a case of what I would call almost in the realm of business model risk. A much more common challenge or a common reason for failure is execution risk, where you've, as an investor, I've just made a wrong judgment about whether a potential founder can execute properly or not. Okay. And as you know, execution comes in 1,000 different flavors. Um, and if they're not able to get the job done, which is my definition of execution, right, then the business falls over and dies. I've had a few of those. Then one or two, which have been very interesting lessons for me, where a perfectly good business and a perfectly good business model was trampled upon by a less efficient but hugely funded competitor. Okay. In the used car space, I had backed a company, and their main competitor is a very well-known now multi-billion-dollar unicorn valuation company. And they saw these guys coming up, and they realized that these folks had a better business model, and they did whatever they could using what I would say are very aggressive tactics. And ultimately, this business basically died, and we had to write off our capital. So one of the lessons I learned from that is that when I'm looking at a company to invest in, and they've got very, very well-funded competitors, then I'm very watchful. Even if this company has a better business model, the founders have amazing execution capabilities and so on, I still wonder if they'll be able to win in the long term. Okay. So that's a third sort of use case. Uh, Fourth use case, which I think might happen in the next few months, it hasn't happened yet, but I'm hearing it happen where perfectly good companies are not getting next rounds of funding. Okay. But it hasn't happened to me yet, so that's in the realm of the hypothetical. But execution risk, business model risk, you're testing a hypothesis, it doesn't work out, you write it off, right? And then I've invested in a couple of companies which are developing products where we've gone in well before the product even reached a POC stage. One medtech company was like that, but great founders. They came out of Indian Institute of Science, and they're doing very well actually. So it may well work out for us. But if they don't, if that company fails, the product doesn't work, you shrug your shoulders and you move on, because that's what angel investing is all about. The important thing, and this is a message to all investors, the important thing is that every failure should teach you a lesson, right? What did you not spot at the time you were cutting the check, right? And that's something that you should carry forward. Otherwise, take failure in your stride. That's the nature of the game.
Yeah, so it's like if you are constantly thinking about the investments that you've made, that means you've not thought enough while investing in the first place. So
Possibly. I think the other side of this, which no one talks about enough, Yaman, even amongst my peer group, and I dare say I'm guilty myself. When investments become super hits, we don't stop to think long enough on what went right and is it replicable, right? What lessons can we draw from, um, you know, from companies which are actually doing very well? And that's something that I've now started to consciously do more of.
and with that, I have a follow-up question on the same lines. But for example, if somebody is pitching to you as an investor, but the moment they start pitching, something turns your potential yes to a stern no. What are those things in a pitch that you sort of, as an investor, identify?
If they've said something that indicates flexible integrity, if founders say something or makes a flippant remark which tells me that their ethical values would flex, it's a big turnoff for me personally. The second big turnoff for me is if I perceive a founder to be close-minded, my way or the highway, don't need your advice, this is my business, you don't understand it as well as I do. Not that they say these statements, but you get the impression that this is the reality that they're living in. That doesn't work for me. Rigid mindsets are the enemy of a successful startup. Dubious ethics are, I don't want to go anywhere close to it. Conversely, a lot of founders feel that they need to be very proficient in English when they're presenting. I've actually asked some founders in the past to just talk in Hindi or whatever language that they're comfortable in. So I tell all founders who are listening to this, don't feel shy if you've got investors who will disqualify you because you're not proficient in English, you really don't want to partner with them anyway, right? But yeah, rigid mindsets, ethics.
Brings me to my next question. From an investor perspective, is it always advisable to invest in a startup and see it scaling to the heights of being a unicorn investment, or should one exit when the time is right?
Not every startup is going to become a unicorn, but I will advise all investors to invest in companies which can make a profit 5-7 years down the line. And ideally, in the process of doing so, are helping to make the world a better place, whether it be clean tech, whether it be ed tech, whether it be financial inclusion, whatever it might be. Okay. I think let market forces decide whether they can become a unicorn or not become a unicorn. Certainly, when I'm looking at a company, I look for businesses which are scalable. I look for founders who have great execution capabilities, who have a passion, and who are building a business with sound economics, with a sound business model. I think this whole business of unicorn, non-unicorn is a function of all of this hype which happened in the last 2 years. Frankly, I think it's done damage to some extent. This singular focus on which company crossed $1 billion in valuation and which one didn't. It matters when you enter a company from a valuation perspective. I mean, you could enter a company at a 6 crore valuation, and at 60 crores, you made 10x. You could enter a company at 100 million valuation, and at 500 million valuation, you only made 5x. So which is a better investment for you, right? So I don't worry so much about whether a company can become a unicorn or not. I worry about whether they can build a strong, big, large, sustainable business. And I certainly um, would feel even better if they are able to, in the process, help clean up the air or educate some people or provide some jobs or whatever it might be.
Thank you very much for giving your time.